Back in 2023, I did a video on a stock and I called it the next Costco, Costco 2.0. Many of you enjoy it, you remember the stock, and you told me it was an amazing call. Please give us an update on the company. And I haven't talked about it since 2023, so I'm so excited to talk about the stock again as it's finally going down. It's down about 26% from its all-time high, and it could potentially be setting up to deliver amazing returns going forward. So I'm going to talk about the stock again. I'm very excited and I hope you enjoy it as always. The stock is called BJ's Wholesale Club, ticker symbol BJ. Some people like to make fun of the name, but this is the ticker of the company. It's down 21% over the last 6 months, but if you go back to this year, it's still pretty much flat. The stock has a history of going up whenever the market was going down. The stock was up like 34% into April. It was just making new highs while the market was going down and everything was going down. The stock doesn't care, and it's more of a recession-resistant defensive company. It's going to do well no matter what. So I'm very excited to talk about this one. But BJ's Wholesale Club is a wholesale club chain in the United States, kind of like a lot of you know Costco, you know Sam's Club, and there's also BJ's Wholesale Club, and they also have gas stations. Of course, a lot of people, they go there and they fill up gas for 10 or 15 cents cheaper, and I have one close to my house and it's always full on the gas station. And after they stop for gas, they go in and they buy their groceries and they save money in general by having a BJ's Wholesale Club membership. It's an annual membership. I believe it's $60 and it's like $10 or $15 less than Costco and Sam's Club. And a lot of people find massive value from having a BJ's membership. And I believe the gas business is not going out of style anytime soon, especially as the EV tax credits were removed in the United States. So this is no longer a headwind on the company, as EV adoption will likely slow down in a major way here in the United States. Now, this is not a small company by any means. They have over 8 million members. That's a lot of members. 8 million members have a BJ's membership with over a 90% renewal rate. The new renewal rate was 83% and it had kept climbing up. Now it's around 90%. 90% is actually pretty good. It's very high in my opinion, and hopefully they can keep on improving it and delivering value to their members. So 90% is very good. The company has a real estate advantage built over the last 40 years. This is not a new company by any means. They've been expanding recently more and more states, but the company has existed for over 40 years. They have 255 clubs in 21 states, and they have proven that their business model is scalable in new states because they have expanded into new states successfully. I believe one of them was Indiana, and they expanded a little bit more over there, and it was a success. Same thing in Tennessee. And the company has proven again that there's demand for the business model, and they can take it into new states and expand beyond their concentration, which is mainly in New York and in this kind of area, which is pretty amazing for the company. Now, you may be asking the question, what is the difference between BJ's and Costco and Sam's Club or even Walmart or Target? Like, why would someone go with BJ's instead of going with Costco or Sam's Club? Because Costco is well known and they have the dollar hot dog or $1.50 hot dog. So why would people go with BJ's? Well, BJ's is kind of different from Costco in many different ways, but the main way it's different, and it has smaller bulk items. So if you don't have a large family, if you have a smaller family, or if you're a single person, or if you're a couple, which this is more of a trend in the United States, you don't see as many large families as we used to see back in the day. A company like BJ's could attract those members more than Costco, because let's say you go to Costco, you want to buy ketchup, maybe there's 3 or 4 ketchups or very large bottles of ketchup, and maybe you don't need all of that. You don't want to spend the money for it. BJ's might have 2 small ketchups, or same thing with toilet paper, same thing with other kind of items. So BJ's also has bulk items, but the bulk items in terms of quantities are smaller than Costco and Sam's Club. So BJ's attracts a lot of maybe single people or couple or smaller families, but any person that pretty much doesn't need massive bulk items, which is most people in the United States. So BJ's is attracting a lot of members, and BJ's is strategically opening stores where Costco doesn't really have a presence, or where the Costco store is very far from those people. So let's say, for example, there's a town and Costco is far, like let's say 40 minutes or an hour from them. BJ's would open a store close to this town and attract the local people, so they don't want to have to go drive 40 minutes or 45 minutes to Costco. So this is another way BJ's has been expanding, and they've been taking market share. But BJ's does not have a food court. Costco has a food court. They have the $1.50 hot dog. And I do go to BJ's, and BJ's has other kind of offers for a lot of members. For example, they have, I believe, 40 bottles of water for $1 and for like $2 or something crazy, or $3. I can put up the picture. So they deliver value to members through something that's special, and everyone needs water, for example. Or their deli space. People say that the deli at BJ's is much better than Costco. So they offer membership value in different ways. They give out free turkeys on Thanksgiving if you buy more than $150 or $200. So they always find ways to offer value beyond just having a food court. Now, the company, as you know, they don't only make money from the difference between what they pay and what they sell for grocery prices, but it's also in terms of membership fee. And membership fee income has grown at an 8% CAGR since 1997, and it's been growing steadily. And as you could see here, every 5 or 7 years, they increase their membership, with the latest membership fee increase being in late 2024. Now, as you could see on this chart, and if you compare it to Costco, BJ's cannot increase the membership fee unless Costco increases the membership fee. Costco is the leader in the space. BJ's recognizes that. BJ's want to stay competitive around 10 to 15, sometimes $20 cheaper than Costco. So whenever Costco increases the membership, BJ's increases the membership. If Costco doesn't increase it, BJ's will not increase the membership fee. So the membership fee increase could provide massive amounts of revenue boost for the company and net income with 8 million members, but they cannot increase it unless Costco increases their membership fee. Now, if we look at the last quarter, comp sales, they look terrible at decreased by 0.3, but this is largely due to fuel prices. Fuel prices were lower, and if you adjust for fuel prices in terms of merchandises and other kind of things, they have increased by 2.3%, led by traffic growth. So it's smaller than Costco. Costco is like 4 or 5% comp sales. BJ's is around 2 to 3.5% on average. But again, BJ's is not Costco in this way. Membership fee income has increased by 9%. Membership count, they grew to 8 million members. Digitally enabled sales, which they have been increasing digital sales, was 34%. This is pretty amazing. And the company spoke on the conference call that they're finding a lot of synergies from AI and potential automation in those warehouses. So the biggest expense for those retailers is the employees. And if over time they can potentially automate a lot of the labor, especially in their warehouses, I think BJ's and Costco could be extremely, extremely profitable. Like the net income of BJ's and Costco is like 2 or 3% net margin. And it could expand in a major way with automation and AI if they monetize it over time, and none of those potential tailwinds are priced in the company. Now, one of the things that I don't like with BJ's is they're, you could say, too conservative. Like they keep paying down the debt, and they have paid down the debt in a major way. And you could say this is a positive for a company, but for a younger company like BJ's, I say, and with such a predictable recession-proof business model, I think they should be taking on debt to expand stores a little bit further, as they have proven that they can actually expand in new states. And they also do buybacks. They reduce shares outstanding. If you look at Costco's shares outstanding, they stay flat or they go higher. BJ's, they actually go lower by around 1% every single year, which is pretty good. But I believe BJ's is finally recognizing their potential, and they're about to increase store count expansion in a major way. So over the last 3 years, they opened 9 stores, 8 stores, 7 stores. Over the next 2 years, they're going to open 25 to 30 stores. So this is almost a double from the previous pace. They're going to ramp up store growth in a major way. And I believe this is good news for the company, as they have proven they can expand in new states. It's scalable, it's successful, and they have done really well. Comp sales are still increasing, not by a lot, but 2.5% is not bad for BJ's Wholesale Club. and they're gonna increase it, take on some debt, use some of their free cash flows. They don't do dividends, they just do buybacks and they reinvest for growth. So they can reinvest for growth in a major way and boost earnings per share beyond the low single digits that we had before, which is why I'm getting excited about the company at such prices. And for their earnings per share target, it's high single digits to low double digits, so between 8 to 12, maybe 11, 12%, which I believe is good for a company like BJ's. Now, if you look at BJ's valuation, this is one that's a little bit tricky. It's still trading at 20 times earnings. It got a multiple expansion to 27, 28 times earnings. Now it's trading at 20 times with an average of 18 times. But what you have to know about BJ's is if you look at the income statement, they have a lot of depreciation and amortization because they own a lot of the real estate. So if they lease the real estate, they would not have such a high depreciation expense. So if you adjust for depreciation, the PE is around 14 or 13 times. So the stock is really cheap. But I think the best way to value it on a historical basis is using enterprise value to EBITDA. And if we use enterprise value to EBITDA, you could notice that BJ's is trading around the historical average of 11.9. Now it's trading at 12 times EBITDA. So it's much closer to a buy than a lot of people believe. But I want to compare BJ's and Costco for a second and kind of make up the comparison that I showcased back in my 2023 video. And if you look at BJ's versus Costco's profit margins, gross profit margin, BJ's is around 17, 18%. Costco is at 12%, guys. So the net gross margin for BJ's is higher than Costco. The free cash flow margin for BJ's is higher than Costco. In terms of earnings per share growth, Costco is expected to grow 10% to 11%. BJ's is around 8.5% by the analyst, but I personally believe they're gonna grow at least 10%. So BJ's has higher margins than Costco. It's a much younger company, so it's much easier to scale the business and expand stores and grow in a major way. I would argue they have a better balance sheet than Costco. Their shares outstanding are actually going down. Costco's shares outstanding, they stay flat or sometimes they go up, and they pretty much have the same growth. It's the same business model. Everything is the same. But if you look at the valuation, Costco is trading at 46 PE and BJ's is trading at 20 PE. Now, do you believe Costco warrants such a premium over BJ's? I don't think so. I think it does warrant a premium over the company because it's Costco. It has the brand loyalty, the brand recognition. It has everything you could want in an amazing high quality company. But does it deserve 46 PE? And does BJ's only deserve 20 PE? And this is again after depreciation. I personally don't believe this is the case, which is why my argument from the beginning has been that BJ's will likely get a multiple expansion and get closer to Costco's multiple. Maybe it will never trade at 46 times, but it could potentially get an expansion to 25, 27, 30 times. And that might sound ridiculous, but if you look at Walmart, you look at all those retailers over time, they get a multiple expansion because the market rewards consistency. So the more consistent the company is and the more they show consistent growth, the more the multiple will expand. Same thing with AutoZone, which is a company that I own, and it's very common with the retailers. And that has actually started happening, and BJ's went up to 28 times earnings. It was getting closer to Costco, and now it's trading back at 20 times, which I personally find very, very interesting. Now, in terms of potential upside with BJ's, I am not expecting life-changing returns, and not every stock in my portfolio I would expect life-changing returns. I sometimes own stocks like AutoZone that are more stable, that could do well. If the market goes down, they could do well in any economic environment, inflation, recessions, whatever happens. BJ's will likely do extremely, extremely well. So in terms of a potential return, I would expect something close to the earnings per share growth. The analysts are expecting around 8%, but I personally believe 8% is too low. If they're expanding stores in such a major way, if comp sales stay at 2.5%, 3%, if they buy back 1% of shares outstanding every single year, I would expect at least 10 to 11% earnings per share growth. So I see a minimum of 10 to 11% annual return with a company like BJ's, but this is excluding my thesis that over time BJ's will get a multiple expansion and it will get closer to Costco. If it does get closer to Costco, I could potentially see 12, 13, 14%, maybe 15% annual return on BJ's. And BJ's has kind of delivered that. I mean, it's up 129% over the last 5 years. Some of it was due to the growth, some of it was due to the multiple expansion. Same thing with Costco. And this is what happens with the retailers. They get a multiple expansion over time. So for me, this is what I'm seeing with BJ's. I'm not seeing life-changing returns, but I'm seeing decent, consistent, stable, safe returns with a quality company like BJ's, something outside of tech. But for me personally, I don't own the stock anymore. I sold it before because I thought the stock was overvalued, and now it's actually trading lower than where I sold it at. But I personally believe I made a mistake selling it, and if I could have done it again, I would have just held it as a long-term investment. And maybe Mr. Market is giving me an opportunity to correct my mistake. But for me personally, I believe the best kind of price to really be buying BJ's for potentially closer to 15% without betting on a major multiple expansion would be around $85 per share. So which would be around their November 2024 price. So if BJ's gets to $85 per share or below, I think for me personally, it would look extremely attractive, and I might get back into the company. If it doesn't happen, then I might just, buy into my other longer term investments, maybe Amazon or other ones, which could deliver a higher return. But I think BJ's is very interesting. Maybe some of you have never heard of the company, and it could deliver decent returns, especially once the AI rally is over, and it's imminent for it to be over. Nothing lasts forever, and this stock could outperform, especially in economic weaknesses and in times of uncertainty. Now we have a lot of certainty, which is why BJ's is not doing too well, and that could change easily any day, any time, and BJ's could be positioned for that. So that was my opinion on BJ's. Hope you liked my idea. Hope you enjoyed it. Not financial advice. If you want to find out more about what I do, when I'm buying, when I'm selling, you could join my group. This is the link if you're interested. But thank you for watching me again, and I'll talk to you in another video.